Brent crude just had its biggest one-day reversal since the war started. The market is pricing a Hormuz deal, but negotiators aren't even talking about peace. Here is the truth. $86.30 is the scalp support. $89.50 is the range ceiling. Break either side and the move accelerates. I have 2 scalp entries and 1 swing trade with exact stops and targets, all in the full breakdown with scalping entries and a swing plan, link in description. Tap now before the 8:30 a.m. Eastern Time data hits. Brent crude just ripped from $83 to $93.33 in a single session, and then gave back almost all of it in the next 24 hours. Most traders are staring at their screens wondering what just happened. There is one danger zone and one hidden opportunity right now. I'll show you both. Here is what the market is not telling you. The tape is pricing a Hormuz reopening deal, not an end to the war. Those are 2 completely different things, and that confusion is about to create a massive liquidity grab. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today, plus the 1 headline that flips everything. Let me give you the instant verdict. Brent crude is range-bound with a bearish tilt inside the $86.30 to $89.50 channel. The session bias is fading the extremes, buy support, sell resistance, until we get a catalyst that breaks one of these levels. Write this number down. If we break $86.30 with a 4H close today, the entire structure resets to $83. That is your invalidation level. Here is where the herd is positioned. Retail is overwhelmingly long after Wednesday's 7.9% surge. They bought the breakout above $90 and are now trapped. The stop cluster sits just below $86.30, exactly where the Monday lows were established. Institutions know this. They are going to hunt those stops before any meaningful rally resumes. This is not a trend market. This is a liquidation-driven range with a geopolitical time bomb underneath. Let me walk you through the chart from the top down. On the weekly time frame, Brent remains in a strong buy trend according to the data, but that weekly trend is now being tested. The monthly trend is still strong buy, which tells me the bigger picture remains constructive. But the weekly trend just flipped to neutral, and that is your first warning sign that momentum is stalling. On the daily chart, we are sitting at a critical inflection point. The 50-day moving average is at $86.53. Price is currently trading just above it at $87.25. The 100-day MA sits at $86.25, so we have a cluster of support right here between $86.25 and $86.53. The 200-day MA is way down at $83, which is your structural swing support. The 4H trend is still showing buy, but the 1H trend is neutral. This tells me we are in a consolidation phase inside a broader bullish structure. Now let me show you what most traders miss. Look at the MACD on the daily. The histogram is printing 0.92, positive but shrinking. Momentum is diverging from price. Price made a higher high at $93.33 on Thursday, but the MACD did not confirm. That is a classic bearish divergence trap. The RSI at 53.885 is neutral, neither overbought nor oversold. The CCI at 43.14 is also neutral. The ADX at 39.13 tells me the trend is still intact but losing strength. Anything below 25 would signal a range-bound market, and we are heading in that direction. Key levels. Write these down. Resistance 1 is $88.65. The level that rejected price twice this week. Resistance 2 is $89.75, the pivot point that flipped from support to resistance. Resistance 3 is $91.95. If we break that, the path to $93.33 and beyond opens up. Support 1 is $85.11, the level that held during Monday's flush. Support 2 is $84. The psychological level that aligns with the 50% retracement of the rally. Support 3 is $82.24, which is basically the 200-day MA zone. Pivot point is $86.88. Price is currently trading just above it, which is mildly bullish for the session. Let me give you a fresh insight from the analysts. Just this morning, FX Street reported that Brent peaked at $93.33 during the European session on Thursday. marking over 50% retracement of the $101.97 to $92.51 bear leg. But recovery faced increased headwinds on approach to the top of the daily Ichimoku cloud at $93.66. Windsor brokers noted that repeated daily closes above $90 will be required to keep near-term action biased higher, with extension above $92.24 to validate a positive signal. Now let me connect the dots on the fundamental side, because this is where the real opportunity lies. The headline driving price right now is the proposed Saudi-led Maritime Defense Coalition. Oil fell more than 1% on Thursday as investors considered plans for Saudi Arabia to lead a coalition boosting defense cooperation around the Red Sea and the Bab el-Mandeb Strait. 14 states including Turkey, Pakistan, Egypt, Sudan, and Djibouti have issued a joint statement in support. But here is the critical insight that changes everything. According to MyTrade, crude oil is pricing a Hormuz deal, not a peace deal. Negotiators in Muscat and Tehran arguing over who controls and tolls the strait, not over ending the war. The market is treating these as the same thing. They are not. Iran rejected Oman's proposal for shared oversight of the waterway on Tuesday and countered with an arrangement handing Iran more control. Iran's deputy foreign minister warned that the strait stays shut if Oman refuses and that toll-free transit is not coming back. That means the most bullish plausible outcome here is a waterway reopening under Iranian supervision with a fee attached. That is a permanent cost on every Gulf barrel, not the removal of a risk premium. Meanwhile, the physical market is telling a completely different story. U.S. crude oil inventories fell by 7.2 million barrels in the week to the 24th of July, roughly 6 times the expected draw, leaving stocks at 404.5 million barrels and about 7% beneath the 5-year average. Cushing sits near 19.4 million barrels, the tank bottom level where storage stops being useful. The Strategic Petroleum Reserve is near 307.7 million barrels after an 18th consecutive weekly draw, its lowest in more than 4 decades. On the supply side, OPEC Plus is set to increase output by 188,000 barrels per day starting in August. This is the 5th consecutive monthly hike, a cap on runaway prices. But here is the twist. A key non-OPEC producer in the Caspian Basin has been forced to reduce output by approximately 400,000 BPD due to an unplanned infrastructure outage expected to last 3 to 4 weeks. Do you think Brent breaks $90 or flushes to $83 this week? Comment bullish or bearish. I'm tracking consensus. The cross-asset linkage is equally important. The dollar index is trading lower, which is supportive for oil. U.S. equities are higher, which suggests risk-on appetite. But the VIX remains elevated, and that volatility is feeding directly into crude's wild swings. Looking at the 1 to 2 week directional lean, I expect range-bound volatility between $83 and $93 until we get a clear resolution on the Hormuz negotiations. The event that invalidates this view is a full reopening of the strait. That would send Brent back to $75. The event that confirms the bullish case is another Iranian strike on U.S. forces. That would send us to $100. Most people skip this section. That's exactly where the money is made. Keep watching. I have 3 setups for you today. 2 scalps, 1 swing. Every single one has exact entries, stops, and targets. Let me walk you through each one. Strategy 1, the opening scalp, scalping. High probability. This is your high probability scalp at the key intraday support level. Here is the trigger. Price taps $86.30 to $86.50 and prints a bullish engulfing candle on the 5-minute time frame. That is your entry signal. Confirmation that buyers are stepping in at the structural support. Entry at $86.40, 5M bullish engulfing after the tap. Stop loss at $85.90. Just below the wick of the rejection candle. Take profit 1 at $87.40. That is the 50% retracement of the daily range. Take profit 2 at $88 if momentum extends. Risk to reward on this scalp is 1 to 1.5 on the first target, 1 to 2.5 on the second. What instantly voids this scalp? A 5-minute candle that closes below $85.90. That tells me the support has failed and the flush to $83 is underway. Strategy 2, the liquidity grab, scalping, counter noise. This is the counter trend scalp that catches the stop hunt. The market is going to run stops. You want to be on the right side of that run. Here is the setup. Price spikes above $89.30 to $89.50, triggering the buy stops placed above Wednesday's high. But look at the 15-minute chart. This is a fake breakout. The RSI is showing bearish divergence on the 15-minute time frame, and volume is fading. Entry is after the fake breakout and snapback confirmation below $89. That means you wait for price to break above $89.30, reverse, and close a 15-minute candle back below $89. That is your short entry at $88.80, 15M close below $89 after the fake breakout. Stop loss at $89.90, just above the wick of the breakout candle. Take profit at $87.20. That is the 61.8% retracement of the daily range. Risk to reward is 1 to 1.5. Warning. This requires fast execution. The stop hunt can be violent, and you need to be ready to pull the trigger the moment you get confirmation. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. Strategy 3. The session swing, trend alignment. This is the multi-session move based on the daily bias and the geopolitical floor that has been established. The structural support pocket is $83 to $83.50. This is where the 200-day moving average sits and where the institutional buyers have been accumulating. The trigger condition is a 4H close above the 60-period moving average with a bullish MACD cross. That tells me momentum is shifting back to the upside after the pullback. Entry at $83.50. Limit by order inside the structural support pocket, or 4H close above 60 MA with bullish MACD cross. Stop loss at $79.50, safely below the 200-day MA and the psychological $80 level. Take profit 1 at $90.80. This is the breakout trigger level that BNP Paribas identified as the gateway to higher prices. Take profit 2 at $96. The stretch target that becomes achievable if we get a fresh geopolitical escalation. Risk to reward is 1 to 3.2 on the first target, 1 to 4.5 on the second. Trailing stop rule. Once price reaches halfway to TP1, around $87.15, move your stop to break even. Let the runner ride to TP2 do explicit invalidation. If we get a daily close below $83, the entire bullish structure is broken and the medium-term outlook shifts to bearish. Never risk more than 1 to 2% per trade. Scalps demand even tighter risk. I recommend 0.5% to 1% on the scalp setups. No positions through the 8:30 a.m. Eastern Time U.S. economic data releases. Stops are non-negotiable. This is how you survive to trade the next big move. And remember, the U.S. employment cost index drops at 8:30 a.m. Eastern Time, followed by Chicago PMI at 9:45, consumer confidence at 10 o'clock, and the Baker Hughes rig count at 1 p.m. These events can trigger massive volatility. Be out of your scalps before the data prints. Let me summarize the single most critical level for the next session. Watch $86.30 like a hawk. If we hold above it, the range-bound scalp setups are in play. Buy support, sell resistance. If we break it with conviction, the flush to $83 begins, and that swing entry becomes your highest probability trade of the month. Tease tomorrow's focus. The Baker Hughes rig count drops at 1 p.m. Eastern Time. That tells us where the U.S. producers are ramping up output. Combined with the U.S. economic data, we could see a massive volatility explosion heading into the weekend. If that $83 level breaks, the whole monthly trend flips. I'll have the updated blueprint 24 hours from now if you want the full breakdown on Aussie dollar, Japanese yen, Nike 225. Those videos are live now on our Alpha Market Meridian channel. Gold, Nasdaq, and Bitcoin are published on the Market Meridian channel. Please click the link at the top of this channel's homepage to access the complete institutional suite. Tap the end screen to jump to the gold melt-up analysis and then loop back to today's Nasdaq gamma flip later. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter. Scalp the noise. Swing the trend.